Okay. Happy New Year, everybody. Uh, Hope you had a very nice end of the year. It was, it was a little bit disappointing in terms of price action, but the main thing was we needed to fulfill the power law prophecy. I made a prediction that it was going to be 93,000 is what they calculated, right? And we were pretty right. And now we're allowed to go up, right? So apologies if there was a delay because of this. But anyway, aside the jokes, it's going to be an exciting year. Hopefully we do see the bull market that is predicted. So let's dive into that. And the best way to do this is again we usually start from when we do this market analysis. We start with comparing the different cycles in this basically overall map that we have, right? So this is one of the indicators that actually is available to the Patreon subscribers, to the Patreon supporters. Right now we have about 11 different indicators, and soon we are going to produce a couple of more. All these indicators, they are accessible in a very reasonable Patreon subscription program. You should see underneath, right, a link on how to do that, on how to join. You get there is this level where you pay $20 a month basically, and you have access to run out 11 different indicators. And we had more or less one every month, kind of. And the idea is that the price will never change, even if we have like 30 indicators. So we are trying to make add more and more value, like Bitcoin, basically, to this service. Anyway, so this is one of the indicators. And in this indicator, we compare the different cycles, right? We're using the power law. So all these are power law feeds. I'm not going. Usually, I give like a long introduction to all the indicators, etc. But I think I want to focus more on the market. You can always watch the previous episodes where I go a little bit more in the details. We have also, if you browse in my YouTube channel, we have also training videos, for the people that want to join the program. We post them almost like every week, and so you can check how to interpret the indicators, what they mean, etc. So I wanted to this time to focus more on the market and see how you can use them to kind of guide you to understand where we are in the cycle. This one is very useful. Usually I start with this one, and then you can go a little bit deeper and check the other indicators. But this one shows in a very clear fashion what happened in the previous cycles, and it compares basically one-to-one, exactly where we were 4 years and 8 years ago. You can go, in fact, all the way to 12 years, and that will be shown here. And then we have also this other indicator. This is not yet available, but I will make it available, where we subtract the general trend, we normalize it because the first bubbles were very big and very large, and so if you just plot them on top of each other in terms of deviations from the trend, pure deviations from the trend, then the first bubbles will be enormous and the other one very small, and will be very difficult to compare with each other. And one of the clues that we have in terms of why, let me see if I go back to this graph, you can clearly see, if I plot one single line, right, this line will mean in a log linear graph like this, where you have a log of a y-axis, and it is linear in the x-axis. One single straight line like this will mean an exponential growth, right? So we kind of start from where the bull market started and when it ended, and you can see the entire idea of this indicator is that the structure is very, very organized, right? There is 1 year where we go exponentially up, 1 year where we go exponentially down. The peaks seem to appear in the same place. The beginning of a bull market sometimes is a little bit early, like the last bull market started quite early, like kind of almost in the end of October. Other ones, it took a little bit longer time, but usually in quarter four, right? All the major things are happening in quarter four. Quarter four of these years, is when the bull market starts. Quarter four of this year, 1 year later, basically, after the bull market starts. I don't use the halving like other people do. I think the halving is arbitrary because the block time is not fixed. So I think it's better to use like a calendar, a human calendar. And so usually the top happens in quarter four of that year after the bull market starts, and that the bull market starts in the same year when there is the halving. That is true, but usually in quarter four of that year. And then after 1 year, there is the peak, right? And then after 1 year, again, quarter four, we have a bottom. This is where we have the bottoms. And so this kind of gives you an overall picture of what to expect. And our philosophy on this is that until we have evidence that this pattern is broken, the scientific way of dealing with this is to assume that they continue. Now, there are other things that you notice, right? That some of them are familiar to you, like the idea that the peaks go down, right, over time. And you can see these, like if we kind of create like an equivalent, an exponential equivalent of this growth. So with one single straight line, it's more complicated than that, right? We go exponentially up for some time, and we have corrections. We have a period of time when the price is flat, when we go up again. We could find like one single exponential that represents the growth during that time. We could even measure the slope, for example, and then say, well, in average, we did 1.2% a day. And if you follow that pattern in a consistent way, this is how it will look like. It will look like if we went through this straight line from the beginning of a bull market to the top. And you can see how these slopes are becoming shallower, right? It's kind of interesting, actually, when we go down, they are parallel. That means we go down in a very consistent way, basically similar across all the different bull market. So a bear market, actually, because we can call this the bear market, right? So the slope is very, very similar across all these bear market, because these are parallel slopes. But you can see these slopes are becoming smaller and smaller as we go through different cycles. Now, most of these decrease can be explained by volatility, because if I normalize these deviations in terms of volatility, then I get these. This is how you get these oscillator right here, that are basically deviation from the trend that are normalized by the volatility. When you do that, then these differences between the different cycles almost disappear. The peaks are all very close to each other, in terms of deviations. So a lot of these can be explained by simple volatility. So it's not a lot of the critics of these diminishing returns of the peaks, where they believe it's mostly wishful thinking that we are not going to have diminishing returns for the next peak, is that they think it's only 3 cases. You cannot extrapolate to the next bubble because it's not enough stats. But they fail to understand that actually these diminishing returns involve the entire system. Has to do with the volatility. As Bitcoin becomes more stable and more mature as an asset, it has still a lot of volatility, but the volatility is going down. And it's not going down only on the peak, it's going down everywhere. So the fact that these peaks are becoming smaller is related to the idea that the volatility is getting smaller. It's not just the peak, it's everything. So we have enough data to support this. And again, the most likely projection is that we will continue to see these diminishing returns of the entire system, and so the peaks also will be smaller. And so this is why we project that 200,000 top here. This is what we always say, that we are expecting about 200,000 peak, and this again is going to happen in quarter of the next year. Now, the cool thing about this is that we can compare one-to-one the different deviations. We can do an average. The blue is the average of the cycles. You can see there is a very precise pattern, right? We go up during this bull component, we go down during this bear component, then we kind of stay flat a little bit below the average trend, right? The average trend is this green line. And you can see what happened in the different cycles. So one of the things that I was pointing out for a long time before the holidays is that this cycle, which is basically the white line here, and the previous one, that is the yellow line, we were matching very, very well, almost perfectly, very weird. And then last cycles, we went very, very fast at the end of the year. I think it was almost a 30% increase when we had a correction here, right? And this was a little bit disappointing, right? Because you want to spend the holidays seeing this kind of behavior. But it was also similar in the first cycle, right? Actually, I called this a first cycle, so this actually was more like a second cycle, sorry. Yeah, because the first cycle was this one. But anyway, so most of the cycles, we went up during the end of the year. The first early cycle, that is this one, we actually didn't start to go up. It was pretty flat. I don't know why I don't plot it here. I should correct that. So this is the first cycle. In the first cycle, we didn't go up until mid of January, Friday 15 of January 21. When actually the bull market started to go up. This year was kind of crazy. I think we were following very, very closely the power law, and then we left the power law and went exponential during that time. The previous cycles, we just say that they were very exciting during Christmas time, but notice what happened with this one, right? It was cycle number 2. So basically, this is what you see here, right? Here. Because when you go back, if you have this indicator, you're one of the subscribers, this is how you use it, right? You look at this here, and then if you want to know what happened next, you go up here, right? You go back, because you see it's cycle. It's like a cycle, right? So you go back one step, and this is where the continuation of this cycle is here. And you see that it will appear, if we look at this in a few days from now, you will start to see that this goes down because it's here, right? So this is what we are seeing here. We have this correction that when we almost undid all these exuberance in the price that we had at the end of the year, and that correction happened at about more or less now, right? It happened like probably tomorrow, January 4th or something. But this is when the correction happened. So these corrections are typical, right? They are happening often. See, there was one here, there was one here. We go up during a bull market, very exciting, and then there is some kind of major correction. Otherwise, if we went up crazy like this all the time, these bubbles will be, 100 times bigger, like whatever, 10 times bigger. And so also here, there was another correction here, and this was more January 8th. So, and big one, right? And then another component, we stay flat, then you know what happened, right? You can look it up in the chart. But, they cover a lot, we cover a lot of ground during this period, and we are kind of behind right now, right? Because if we go, we have a 1 year of time to reach this 200,000, so we have plenty of time. Basically, we need something like on the order of 0.22% a day, and we actually did better than that, right? Even with this correction, we can check it out in a moment. We have an indicator for that too, how much returns per day we have. Well, I think we are on the right path, right? The price, it's cool, is going back up. There are a few things that are a little bit worrisome, right? So this is cool. This is nice. We didn't cross back down the power law. It is a good sign. We almost thought kind of bounce back, come very close, and then we bounce back. Now we are going to see what happens in the next few days, but it's nothing to worry about, right? We do have other indicators. I have this one, which is, so the interpretation of this indicator is this. So many people, they want to criticize the power law. They say, oh, the power law basically tells you the price can be anything between, this support line. If you are even aware, we have a support line. So right now, for example, they will say, yeah, it's anything between 34 and then, whatever a reasonable peak is. You can use different things for that. You can use, let me renew this. Okay. We can see better the price. They say, okay, it could be, and there is, for example, this quantile indicator that we have, and I can show you in a moment. But you can say, well, anything that goes all the way here, right? We could draw a line here, deviation, large deviation. Say that is also allowed, so I don't know, if we go a little bit, so maybe $200,000, anything between 30,000, 200,000, right? Well, it's still better than 5,000 and 5 million, like some people claim that we could go all the way to 5 million, but it's not the right interpretation. This is not how you understand the power law. The power law has clearly two regions, right? There is this region where we are below the power law, and there is a region when we are above, and the stats are very different. I have posted before distributions of these stats, and you can see there is a clear bimodal pattern. There are two different, basically, distributions. There is one that has to do with the data below the power law, and one with the data above the power law. So it's much better to treat it in that way, like if it was kind of a switch, right? There is a switch. There is the behavior below when we are below the power law and when we are above the power law. And until there is evidence that this is broken and is different, right, that there are no cycles anymore and so on, we go with this interpretation. That is, I think, is the more valuable and allows us also to be more precise, because then the range of possible value is much more limited. And in fact, this is what we are trying to represent here. This basically, this dark region here, this dark line, is the average, overall average, if I only look at the data below the power law. This is what we get. And so this is the most likely place where the price is going to be. And then you can characterize deviations from this average here in terms of this gradation of colors, right, that you see. By the time you go all the way to two standard deviations from this average, but now it's going to be much narrower range. Like, for example, if you look at what is allowed, right now, if we were below the power law, we are not, right? But let's take this point, right, where we were supposed to be below the power law, it will have been 52. The power law say, well, by the time you go to 61,000, it's a very unlikely value, right? And we went above there, and so this is a much narrower range, right? So basically, the power law says most of your action is going to be here, around in this green area, and you can see it was pretty much right? Most of the time, we stay around that value. We added this large deviation, and you can identify these large deviations as the bottom, because if we go there and we are farther away from the distribution, it's probably going to correct. It's where you're going to find the bottom. We have also this other way of finding the bottom, which is very, very consistent. That is this 60% deviation, but this also will be another way. So you cannot say that something like this is imprecise. It's very, very precise. It tells you, look, most of the time during this period where we follow along the power law, it's still bullish because we are going up pretty fast, right? The average return here is 0.1% a day when we follow the power law, in average, right? But then most of the time we are in this narrow region around this darker line. And so, and if you have a deviation, then there is probably a correction. Like here, we were not supposed to be there, right? Here will mean we are going to correct up because we are below this line. And here, probably we're going to correct down, like it happened, right? This was too far away from where it was supposed to be. And we did have a correction, and we went in that green area. Now, as we, approach the bull market, it needs to go up, right? And so it's going to leave that region, and it's going to go up because the bull market is characterized by switching. Now, there is this intermediate region, maybe we can color code it another way or whatever, orange, or yellow. But there is this intermediate region where we switch, right? So of course we leave this region. But you can see, aside this region where we switch, most of the time the price was in this region. And if there is a deviation, it means it's going to correct. So it's much better way of thinking about the power law, having these two modes, It's much deeper understanding of how Bitcoin works. And this indicator is not yet available. It's ready, it's finished. I'm going to publish it soon, and it's going to be one of the 11 indicators that is available. But actually, this will be number 12. Okay, and same thing here, right? So this is actually pretty cool because once we go above the power law, then we have another regime, which is like another average that we should consider as the typical average for that regime. The blue line is the power law that we are used to. That you can see it's kind of a compromise between this dark region and this dark region. It's in between. But these are, it's more abstract because we really spend very, very little time. It's the overall pattern, but most of the time we spend it here, most of the time we spend it there, like by model. And there is like a transition region where we spend very little time there. Now, as I was telling you before, the coloring of this shading is determined by the distribution. And here the distribution, because we're talking about the distribution of the returns, so volatility, what we call volatility, it basically describes why we have these bubbles at all. It's actually, I'm going to think more about this, but all what is saying here is that we have a bubble because we are in this regime where the volatility is much higher, and it creates an average value, because also the returns are high. So two things are the returns are higher because, we go from this place where we're making about, right now, and these are also going down, right? These are recurring ones. Recurring ones are about 40% a year or 0.1% a day. And then when we go to the bull market, we double, triple that, right? We go much faster up because we are in this exponential regime. But if you take out the volatility, you're still moving along the power law. And this is why we have an overall power law, right? Another way I always say it's basically the bubbles cancel each other. But another interpretation is that we have these two regimes where we still follow the power law, you see this black line, but now we add also a ton of volatility around it. And this is how you get the bubbles. They are just large deviation from this general trend. And even this diminishing return of the peaks is all explained by a reduced volatility. If a volatility was as high as it was here, for example, we will get, you see how the shading is the same, right? And this shading is determined by standard deviation. So the standard deviations here, so this is what volatility is, a standard deviation of the returns. The volatility was so big here that it did allow for this peak to be much larger, simply because of the volatility. And this now we understand much better why we have these diminishing returns of a peak, because it's all due to this changing volatility that is decreasing over time. So by doing that, we can actually localize regions where the price is over, so hot. And this is what this indicator is doing. It's telling you by the time you go to this darker region that is about 2 standard deviation of a data above a power law. So it's much narrower region than standard deviation of the entire data set. And we are in a place where very likely there is a correction. So it's a way of identify one of the many ways. We have several, but this one will be based on this average above a power law plus volatility, right? So by the time, if you are in a region where basically it's all dark or a very dark red, there will be a correction. That is the entire idea. And so it worked in all these bubbles. This is actually a pretty cool indicator. It's showing, that by the time you go 2 times away from, 2 standard deviations away from the average power law, then, you're going to have a correction. And this is becoming more and more stable, right? You see how you have a bump here, you have even a bigger bump, because we are calculating the average over the entire data sets of all the data points above a power law. And we are looking more and more like a power law. We are approaching basically like a parallel line behavior. And now, if we want to make this relevant to where we are now, we are above the power law. So we are in this regime. This is where the relevant average for the bull market is. That value right now, it's about 113. So we are actually, in a sense, undervalued, right? Because that is the most likely value during this bull run, 113. Compare that with S2F, where it says, between it doesn't divide, bull market versus no bull market. It's all one big straight line. And that straight line represents the average behavior. So according to that model, the average value, he corrected by a factor of 2. It should be actually 1 million. But even if you are taking at face value, it's 500,000, right? That is the average value. It means that actually the top should be much higher than that, if that is the average value. But our average value right now, it's 116, so something like that. Now, of course, as we come closer and closer to the top, if we go to quarter 4, that value will be much higher, right? It's going to grow. But it's going to grow more or less at 0.1% a day, while when we go up, right, we are saying we will need to reach 200,000, we will need to go above by, basically a factor of 2. So it's going to be, instead of 0.1% a day, it's going to be 0.2% a day. And then that will allow us to reach 200,000 by the end of the year. We are doing fine. Everything is fine. It looks good. The only thing that is worrisome, that is, I say that every single time, it's this, right? it's liquidity. And the reason I put a question mark here is because I don't know what is the interpretation of that. Is it really worrisome where we are not going to have a bull market until we see this purple line turning around, right? So for the people that are new, or maybe they don't follow these updates, this purple line was created by looking at many different parameters that are linked to global liquidity, like M2 of different countries, basically how much cash there is around, how much savings, all these kind of things that are measured, that basically show how much possible investment money there is, both from individual but also large entity like large banks, etc. So I had all these parameters. I wrote an entire article. You can find it on X. You can find it on my Medium on how I derived this. But basically, it's a measure of liquidity. And instead of plotting the measure itself, I'm plotting its relationship with Bitcoin. So basically, it's a Bitcoin price model that is based on liquidity. So in other words, what is the fair value of Bitcoin if it was due only to liquidity? And right now, that value, it's about 35,000. 35,000. Very close to the support line. The support line is 32,000. And historically, we never went down there. So, and we are going closer and closer to that support line. That is, I don't know. What is the interpretation of that? For some time, I was looking at these, right, and this is why I have this two line here. The price was correcting, it was down, was going down, down, down. And I was hoping actually for this correction to be stronger. I didn't have to go too low, maybe, in the 50s. And then if a liquidity continued to go up, like here, we'll have crossed it. And then in this indicator, you will have shown kind of a green area, we switch when the purple line is above a white line, we have green. And this was kind of comforting, because this is what we saw every single time we had. See, here was the crossing, right, where the purple line goes above the white line. This happened during COVID. We needed that big correction due to COVID to actually reset this relationship. But then the two, once it was this correction, the two went up together, right? And we had this green area between the two. Same thing here. We had, it was actually early on, there was a switch kind of here, but we had this green area before the bull market. And in fact, you can identify when we reach too much of a frenzy, too much of a FOMO, when actually was a decoupling between these two things, when the price started to do its own thing, and liquidity say, well, I'm not going there, goodbye, and he continue his own path, kind of peaked, but much later and in a much smoother way, right? Didn't do this craziness. So it was cool because we could have used this also as another way of identifying early on regions where very likely there is a correction, but we don't have that anymore here, we have this, and the prices continue to go up, the liquidity is going down, has been doing that since kind of end of September, going down, 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 down. I don't know what to make of that. Right? The main worry is, do we have enough liquidity coming from other sources like the ETFs, Tailor, some hidden Arabian country, like all the different legends and myths that people spread around, that are buying secretly Bitcoin, etc. Are all these entities enough to support the bull market, right? That is the main questions that we have right now. I will feel much better if it was a turning around of the quantity. It's the beginning of a new year. Maybe new things are going to happen. Maybe there is some injection of liquidity from somewhere. But right now, it's the main concern. That is the main concern. So I don't know what to make of that. Everything else looks good. I can show you the volatility picture. If I find it here. Okay, so this graph, it's another of our indicators. So this one basically shows the volatility and the returns, the daily returns. I kind of switch off of a daily one. So if you plot the daily one, it will be like a mess like this, right? This every single day return. So return in this case means the price today over the price yesterday. And so when you have a very nice day, like this one, for example, is going to spike up, right? And you can read what was with value. For example, we had one day where was 6% change in price. And when you are below one, it's a losing day, right? Like, for example, this was almost like a 4% loss, right? And this is what these gray lines represent. But this is basically a mess, right? Sometimes we're above, sometimes we're below. You can see by inspection too, right? There is a lot of activity during a bubble, right? This is what I was telling you. So the changes, the amount of change is what we call standard deviation. We take the change relatively to the mean, and that is what the volatility is. And this is what is shown here, right? By this graph. This is the standard deviation of the returns, one above and below, right? So this see how we have a peak during of this volatility during the bubbles. The bubbles are associated with the big change in volatility. It's much more active during these times, much more active, and the activity became smaller over time. You see look at how huge it was during these first bubbles, right? See, it's associated with this craziness here. But yeah, it's interesting to look at it, and you can learn stuff from it. But usually I turn it off, because otherwise it's a little bit too cluttered. And if you turn it off, what we have left is this white line. The white line is the average, right? And the indicator allows you to choose any average you want. Right now, we are averaging over 365 because it's actually one of the most useful average. You can do it over a month, over 10 days, whatever you like. But 365 is nice because basically, imagine you are at the top of a bubble, right? And then you're looking backwards and you say, oh, what was my average return over this year, right? That is basically the kind of returns we need daily to reach whatever goal, whatever top we're going to be. And you can do the same. So for example, if you look at this bubble here, you go there, and we had almost, if you look backwards and you say, oh, what was my daily average return over this year when I am top of a bubble? That will have been almost 1%, right? 1.01 is what the indicator says. Hopefully you can see it. But that is basically 1%. So you made 1% a day over 1 year, you ended up there, right? It was pretty amazing. This was in 2017, right? The end of 2017, beginning of 18. That was an amazing bull run. The last one, if you use this as the top instead of this, like the discussion is which one was the real top. I think my preference will be to consider this to be the real top, but this was an early top, and you look backwards, was more like 0.75%. So this is the usefulness of this, and you can see how it actually picks all the tops and all the bottoms, right? It's probably one of the best indicators you can have. Tops, bottoms, tops, bottoms, and so on. You can do this also with the slopes, and we have an indicator with uses slope, and it's actually even more precise than this. The slope of a power law. You can fit the power law over every single day. You can make a graph like this, average slope, and it's also very good in indicating the tops and the bottoms. Now, the blue line that you see here, this is the power law. So if it returns, if we just grew along the red line, right? So if we went up only following the red line, and I cannot understand where people say, oh, Bitcoin doesn't follow. One of the influencer said the other day, because Bitcoin doesn't follow a chart. No, really? Look at this. Is the red curve not a good representation of what Bitcoin does in average? I think so. Maybe you don't understand it, but it does. But anyways, if we did follow only the red line, then the returns will look like the blue line. This will be the return. See, this is when we talk about diminishing returns. It's not only the peak that are going down, it's a general thing. It's everything is going down, right? This is the blue line, and you can see, the returns of a real price are simply oscillating around that. That means this is a good representation of the average behavior of Bitcoin. The blue line is a good representation. Say, forget about the ups and downs. If we went through these and we average these returns, we will do basically the same thing, because the tops you go above, the bottoms you go below, but the red line is still very, very good representation of the average behavior. I don't understand. Are these people looking at chart at all? Do I understand, what is happening here? I don't know. Maybe they don't, right? And so this is what the blue line is. The green line is what we need to be above. So we need to be above it, because you see, I put it here. It's kind of 0.34. Actually, that was when we started the bull market, right before we went to 90,000, etc. Now we are above that. We are 90,000, so we don't need to go 0.3% a day. 0.25 will do it. Will bring us to 200,000. But it's good. It's healthy if we start to go up there. And notice, where I pointed out here where in this pattern we were in all the other cycles, right? Here, this where we are on the cycle number 1. We had a big correction when we went up very quickly. We had also a double top that cycle, that first cycle. We had a top here and then a top there, much higher. This one was much smoother, much more consistent. We were kind of there at this time of year, above the power law returns, kind of look flat here, and then it started to pick up. Same thing here. This was a little bit early, right? Because this was the last cycle. Then we went up. So right now it looks very flat, and this is equivalent. I like to see these where we start to go up in terms of returns, and we go above this green line. The purple line is, if we want, we will have to be above that purple line to reach 500,000, consistently above, not just crossing it, but consistently above that purple line to reach 500,000. It's much more likely that we go above that green line, and then we stay above that green line, and that will allow us to go to 200,000. The other thing you'd notice from this graph, like you see how the peaks are going down, the general trend is going down. Notice how cool it is that the bottoms are all kind of flat, right? We could also draw kind of a line, right? It's flat. And that is basically this support line that, we never go below that support line. Again, some very, very deep property of Bitcoin. And there are all these properties, like, that has to do with hash rate, with fact that mining will be unprofitable if we go below that. And this is why, while this, see this, if you're a scientist, if you're a data analyst, you cannot ignore these things. Like, you can do how much wishful think you want, but you will not be a good observer if you don't see these kind of things. There are very precise patterns. This is decaying, this is staying flat. It has meaning, and it's very useful. You see, look, how can you deny? How the power law denier can tell, oh, there is nothing there? Look at this. Look how we define these bottoms. Even during COVID, right? We didn't go below that. It's magnificent, and it's not me, that is exploring these things. There are more and more people exploring them. Is Bitcoin, is how beautiful and regular and precise and amazing and useful Bitcoin is. People should celebrate this instead of putting it down. And the only reason why they're putting down is because, we would like exponential growth, but not even the exponential growth of the other assets that is very, very slow exponential. We want exponential 40%. We want exponential 100%. That is impossible. The system will collapse. We don't have infrastructure. We don't have a hash rate to support that. It will be actually disastrous. To me, it's a funny meme when people talk about God candles, but if they really cared about Bitcoin, I'm serious about this, right? I know they like Bitcoin and they are in Bitcoin, and they say these things because they don't think about it. But if they thought about it, they will realize that it's not good for Bitcoin. It's not just greedy. It's not good for Bitcoin. If you care about Bitcoin beyond the meme, if you care about Bitcoin about just making a bunch of money, I care about, like, it should be part of Bitcoin ethos, right? Being part of this community. We make money, but also we care about humankind. We want a different monetary system, right? If you care about all these things, you should cheer for the power law. The power law is what will bring us there, and will do it in a consistent, powerful, and sustainable way. So you want this to continue, and to be there with these fun periods where we have these bubbles, and these bubbles are becoming more manageable. They're becoming smaller. It's what is going on, and there is plenty of liquidity. There is plenty of volatility to still make a lot of big, huge gains. All right, so I think I'm going to keep it here, and focus on questions instead. All right. Do you have a Discord link? So, okay, let me scroll all the way up. I'm going to highlight the questions. Okay. Hey, hello everybody. Good morning, John. It's evening for me, but good morning to you, Saxon Smith. Saxon Smith is my favorite followers. He's always here every single time. Very good. Kudos to you. Great TA. I saw the consumer demand. Okay, here. Great TA. Now I know that people use this term TA. Technically, this is not technical analysis, right? So really, I try to avoid what is called technical analysis. So technical analysis is all these tools that people use, like it's okay to use moving averages. That is kind of a scientific way of analyzing data. But by the time you go to drawing some line, let's say I draw a line from the peak to peak, and say, oh, look, there is this line. This is many people do things like that. That basically there is no real math behind it, but we have some. It's almost like astrology, right? We see some higher highs, lower lowers. Did anybody ever show that having higher and lower lowers means anything at all? Is there a consistent pattern? If anybody did a statistical study, show, hey, when you have a 3 higher and 2 lower, then there is 80% probability that we go up. I will care about that, right? People actually did have studies on these majority of these TA indicators, and they don't work. They don't do better than 50% average. We are trying to be away from that and use more scientific approaches. Like, for example, this idea there is a mathematical pattern that is found in nature in many different systems, that is a power law. And then trying to derive consequences from that, right? For example, when we say there is a support line here, it sounds like some of the things that the TA people say, but it's different because in this case, we link it, for example, with the on-chain data, like a hash rate, for example. And we say, oh, it turns out with this support line that seems to connect all these bottoms actually is connected with the cost of production of Bitcoin. So we are trying to come up with scientific ways, like, we are studying the orbit of a planet, the behavior of a gas, right? And I know that people don't think that these things can apply to financial assets, but this is what we are showing, that at least for Bitcoin, it is the case. So I know you were trying to make a compliment, and I thank you for the compliment, but I will not call this TA. I will reserve TA to the more conventional way of analyzing the data. My son, for example, does some of that, and he has his approach. I have my approach, and it's okay, because some people like that. I try to avoid the TA language, because it's a different approach that we are following. But you were saying, so the consumer demand is going lower, the manufacturer is still shrinking, and next people will get laid off. Yeah, so this microeconomics, that is another scientific way of analyzing the data, looking at the microeconomic parameters. I have one, and again, we could maybe at a certain point it will become an indicator. There is a process where you get approved through the indicators. Let's look at that one. And so it takes time. Let me see. I have it here somewhere. It's the PMI index. I have too many of these ones. I don't know, sometimes TradingView replicates. Let's see if I find it. This is also a cool one. Yeah, this is also interesting and worthwhile to look at. This is a futures versus spot. We really would like this red curve to be above the blue one, and we are kind of seeing a little bit of that, but we are not quite there. So basically this is the ratio between future and spots, right? You can see that usually when we go fast up, the red one is above, and right now it's below. But I think it's correcting, and so we should monitor this one. But I was looking for the PMI. Yes, it is here. Yeah. So this is the PMI index, where basically it's manufacturing. So it's some kind of a survey, and it's all based on data. So it's not just like how do you feel the market is performing. It's based on a real survey, based on how much the cost of production, how much selling and buying. We have a bunch of questions, and it's really cool because it does seem that is one of these microeconomics parameters that is strongly correlating with Bitcoin. You see, all the peaks, all the bottoms. Actually, the bottom seem to appear like 1 year before for Bitcoin, relatively to the bottom of the PMI. So it's something to look at. Another thing that makes us confident that cycles will repeat, because we are so linked to these indexes. And so it's something to check. And you see, this is the green one. It's the PMI, and the red one is Bitcoin. And here you have a PMI. It's kind of a little bit going up now, So This is, I don't know why it's not reported here, but there was a correction up. Okay, that is cool. It hopefully continues to go up, right? It's something of a long term because it's basically done once a month, so we need a little bit more data to see. But yeah, it's the liquidity is really what worries me most. Let's take another question. All right. We miss you. Let's start this year strong. Thank you. Yeah, hopefully, I took a break. Hopefully, we do this every month consistently. All right. So you would like Microstrategy. Let me go back to Microstrategy, see if there is any other question related to Bitcoin, and then maybe we spend a few minutes on Microstrategy. Yeah, the Discord, you have a Discord group. The way to get into the Discord is through joining the Patreon program, and you can see I have a link there. Basically, you go to Patreon Scale Invariant, that is my name, the name of the Discord group. You join the program. If this discount doesn't work, let me know. DM me. I think it was valid until a few days after the year, but I can make another one. I can give you another couple of weeks after the year, to celebrate the new year and give you a discount. Let me know if that works. If it doesn't, let me know. DM me on X. But yeah, this is how you do it. You join these. And if you get the insider, you get like 11 indicator. I have like 2 or 3 coming up soon. Eventually, we will have 20 indicators. For $20, it is nothing because some of these indicator people charge $100 for them. And you get access to the Discord. The Discord is really cool. We have almost 1,000 people there, and we have people helping each other. We have several channels. We have a channel about options, one about futures. So we have different. We have even one about alts. We just keep that channel to talk about alts. We don't talk anywhere else, but you can talk about alts in that channel. So it's really cool, and it's a growing community. So try it out. It's basically you're getting 2 weeks free, so you can join and see if you like it, and then you stay if you like it. Okay. So my son is here. Hey, Saverio. Happy New Year. If you like to can show more. Okay, here, let's see this question. If you like to, I can show you a more precise and broad approach to the liquidity model. Yeah, I'm always open for collaboration, and I'm trying to learn from everybody. The only people that I get upset with are the trolls. If a troll comes say, "Hey, you don't know anything," and then I get upset, right? But if you are open and you want to learn stuff, that is the entire goal. So contact me on I don't know how to contact you. Do you contact me? Okay, you're from X, so DK. But contact me, send me a DM, okay? And we can talk about it. If you have something interesting that it's valuable, then we can work together and share it with the community. Liquidity is something that I'm still trying to learn, so I'm willing to open my horizon on that. So if you have something that you want to show me, I'm willing to learn. Okay, so somebody says the discount is inactive. Okay, I'm going to make another one. Okay, and then I'm going to post it on X. So usually you find it. You should be able to find it in the pattern itself. It tells you where is this discount. But let me work on that. Okay. All right. Power law is in technical analysis, technological analysis. We can call it in that way. Yes, it's more a scientific approach, right? We use all these tools that real scientists would use. There are a few technical analysis, like if you take in, like Bollinger Bands. Okay, you're saying this is the average, and these are 2 standard deviation from the average. But even that doesn't work too well, many times. But it's probably one of the most scientific indicators there. But the power law, it's all about this idea that everything happens proportionally, right? And because of these power laws are found in nature, are found in human activity, like how a city grows, we really think it's something deep, right? That is not just another pattern, it's another line, it's not a regression. Like when people, for example, that is one of the difference with Ben Cohen, right? Ben Cohen is very good analyst. He does certain good things, but he calls the power law, he calls it log regression. You take away the meaning of a power law. Why don't you call it power law? Maybe because you think so. Then people think that I'm basically copying Giovanni. I don't know if that is the reason, but I mean, it doesn't belong to me. You can still talk about the power law, but call it power law because you're pointing out how this is a pattern that is very meaningful. It's not just a regression, because a regression, you can do any regression you want, and you can do any model you want. And if you find something that has meaning, that these power laws have all these properties like scale invariance, etc. That's why I make a big deal out of this, and this is why physicists make a big deal, because we have all these very interesting properties like growing proportion, and then you get like a framework. Now you can accept the framework or not accept the framework, but the framework is everything that happens to Bitcoin happens in a meaningful way. It happens in a scale invariant way. So when we go to the next step, it's simply part of the pattern of growth of Bitcoin. It's much, much deeper, So it's not just like another line, It's something much more. And this is what I'm trying to show and share with people. Now, eventually we will have a book. You can read the book, you can think, but right now you can read my articles, all the things I say. You don't have to accept it. And I know it takes time to process it, even for me, But scale invariance is one of these things as a physicist that we are learning very early on in our career. Then we use it as a guiding principle to understand nature. And it has worked over and over and over again. And this is why it's such a powerful tool to understand Bitcoin, because of all the experience of all the people that have applied this way of thinking to nature, And Bitcoin looks more like nature than a normal asset. We have a problem with the discount code. Okay, I apologize. We'll make a new one. And then I will post it on X. I will post it everywhere, okay? And you can use it. Can you show the Monte Carlo projection? Yes, we can do that. What is your opinion on the ballistic model of MicroStrategy? Okay, let's talk about MicroStrategy for a second. Okay. So we have an indicator that is an indicator, MicroStrategy indicator. And this also will allow me to tell something about this ballistic model, right? That some people have heard about, and I will tell you what is that model and what I think about it. So I studied MicroStrategy. In fact, I think I was one of the first people that mentioned there was a very precise relationship between Bitcoin and MicroStrategy. The relationship is a power law. Now, like always, we have to be careful because power laws, to be really truly power law, you have to have many order of magnitude, right? And we don't have, because sailors started to do this Bitcoin stuff since 2020, right? We have only 4 years of data, and you can see, in fact, right, because before, I think it was August 2020 when they started to buy Bitcoin, right? Before that, the price was flat, right? You can see why he was eager to do something different, because for many years he was not doing much, right? It was like basically flat at around, $10, $12, right? It was not doing much at all. And then we started to implement this Bitcoin strategy, and basically the two started to get very strongly linked, right? Now, that is amazing how the market knows, right? Like very quickly, the market started to integrate this information. The market is really like, it's like almost like an alien mind, right? Is where all the people come together and make a decision together as a group, and they process all this information. Like I very quickly observed that the most of the value of this stock comes from Bitcoin, and you will think it's trivial, but how it is trivial, right? I mean, people say, okay, I'm willing to be paying these, and somebody else say, I'm willing to pay, and it tracks the price of Bitcoin. I know it sounds trivial, but to me, it's not trivial if you think about it. It's really cool. One of the things we need to figure out is how come the price of Bitcoin is the square of the addresses. How the market knows that, right? How can figure out how these multiplicative effects of the network get expressed in the price. I don't know. We know that should be true because of the network property, but how that happens is something that I want to solve. At a certain point, I want to create a model that, you understand what I'm asking? Say, how do we know? How the market knows that, we went up by a factor of 2 in adoption, and now the price needs to be 4 times bigger. How the market knows that? It's a mystery. But anyway, you see how basically the blue line is the price, and the red line is, what I did do, I plotted the price of Bitcoin in the x-axis, I plotted the price of Microstrategy in the y-axis, and then take log of both sides. It looks like a straight line. It looks like a bunch of dots that follow kind of a straight line. And so you can measure the slope. The slope is 1.3. So if you do that using only the data from 2020 forward, then you get kind of like, looks like straight line, at least in the beginning. In the beginning, it was very clear. And in fact, then you can make a model. Of course, I'm trying to make the model from the beginning, but you can see it only works after 2020, right? So you go backwards and say, if MicroStrategy follow Bitcoin, this is how it look like, but it didn't, right? And Bitcoin was very, very, was not worth it much of the time. So actually MicroStrategy price was higher. But then, after they started to play with Bitcoin, the two models look much, the price of MicroStrategy and the models start to match, right? And you can see they start to match very well. So in the beginning, it was almost perfect. I was very happy about that. Say, oh, great, we have now a nice model of how of what to expect, right? So again, remember, this basically means if there is this power law between the two, then the orange line is the fair value of MicroStrategy. When it is above, means it's overvalued. When it's below, it's undervalued. But in average, you see they follow each other very well. And then you can draw this green line that basically represents the MicroStrategy power law. That, because of that 1.3, how it works, you multiply the exponent, right? Given that the Bitcoin power law is 5.7, if you multiply by 1.3, you get something like 7.1. So the green line is a power law with an exponent of 7.1. So like basically a super power law. Like you could think about MicroStrategy as a Bitcoin super power law with this consistent, relatively small 1.3, right, 30% advantage over Bitcoin. And the idea is that if that holds true, right, you can calculate what you get, because the way you do it, you take the power. So for example, let's say that Bitcoin went up by a factor of 2. Then if you take 2 to the 1.3, you get 2.46, right? You can try to do it yourself. If you do 3 times, to the power, right? Take the power of 1.3, you get 4.17, right? So instead of 3, you get 4. See, you get a bigger advantage as, because it's non-linear, as Bitcoin goes up. 10, for example, let's say several years from now, Bitcoin is going to be 10 times bigger. You take 1.3, 10 to the 1.3, you get almost 20. So basically, in 10 years from now, you will have got, 20 instead of 10, right? It is amazing. So a consistent gain relatively to Bitcoin. But then what happened? Well, we started to see a disconnect. First of all, there was this jump here, still kind of followed the pattern, but there was a jump, so it got overvalued. And then, when all the degens came in, that basically are treating MicroStrategy like if it was a shit coin, they started to make the price going exponential. I don't think it was anything that MicroStrategy did per se. It's more how people reacted to these and started to speculate, leverage positions, all kind of things. And I pointed out many times, I say, this doesn't look good because, yeah, it's all fun and games, right? Oh, it's going exponential. And Bitcoin was this, right? Bitcoin is this magenta kind of pattern. So we were still flat, and MicroStrategy was flying, and people got very excited. And then, not just that, they started to fly even faster. So every time you see a straight line, remember, in this log linear chart means exponential. Fast exponential, even faster exponential. And they started to say, it's not sustainable. It's not going to be sustainable. Something is going to give. And in fact, it was a correction. So I actually predicted that. I say that this is not good. So and now we don't see that. I don't know if we are going to see other behavior like this, but this is one of the way we can track, right? At a certain point, I want to make maybe a difference between these two. I'm trying to do it here, but still a work in progress, because we can calculate. Okay, this is if we continue to do this power law behavior. These are deviation from the power law behavior that are not explained, and so actually that is a sign that eventually there will be a correction, because this is not sustainable. If people thought, I'm sure there is some of these, I have sympathy for them, because I am okay with people being a little bit more bullish, trying to use a little percentage of their portfolio to do a little bit more aggressive things, and they thought, MicroStrategy was the aggressive things to do, etc. But it's still linked to Bitcoin. It's not a shit coin, and if you are treating like a shit coin, you're going to get shit coin behavior where you get these pumps and then there is a dump. And right now, because MicroStrategy is not a shit coin, the dump was not very violent, was not crazy, didn't go to zero. But I don't think it's the right way of thinking about MicroStrategy. Now, we cannot stop them. They can do whatever they want, but I would rather see this continued sustained growth of MicroStrategy relatively to Bitcoin, because then it becomes like a natural way of doing leverage. It's good, but I think the system will correct itself, because in the end, that is a good thing about being linked to Bitcoin. Where Bitcoin, it's robust, is reasonable, it doesn't like to do these crazy things that people want Bitcoin to do, and eventually Bitcoin, you can have a partial exponential behavior, but then there will be a correction eventually. So this, it's good. I don't have anything against MicroStrategy. I'm a little bit concerned when people treat it like if it was a shit coin. But then there is a correction. It's almost unavoidable, and we already saw this correction here. So maybe this could be a play that you want to do, where if we see super exponential behavior happening again, and maybe it's going to happen again, then maybe you want to short it. I know that you don't want to short MicroStrategy, but you're not shorting MicroStrategy, shorting the crazy people that think that this exponential behavior can continue to go forever. Or maybe if you don't feel like you want to short MicroStrategy, then stay out. In particular when it's too heated. So right now maybe is a place where, because things are starting to go back to normal, maybe the price is pretty low, maybe it's a good place where to buy some MicroStrategy. Don't buy it when we're close to a local top. So this is mostly what I can say. Now about that model, what they did, first of all, like always, like I hate when people use wrong terminology, like the pi cycle. Nothing to do with pi, absolutely nothing. It's just misleading, because we took two numbers that are, by phasing around, because he could have chosen 20 days more, 20 days later, and then it would not be pi anymore. We are roughly 1 to 3, right? One long term average that is about 300 days, and the other one is 100 days, right? So it's 1 to 3 ratio. It's not pi. It's really misleading. They call it pi because it makes the name cooler, but it could be 3.2 and will still work. It doesn't. It's so silly. And this guy called it the ballistic, because at a certain point, I think sailors say, oh, the price is going to go ballistic or something. Ballistic has to do with the projectile motion, right? And is an expression. And projectile motion, yes, as a square term, that under constant gravity, right, on Earth, basically, it's a power law. In fact, it's basically how much ground is covered by a falling object. It goes with the square of time. And so, I don't know, for some reason, this person, I know the guy, I talked with him, in a group, but he went too far with that analogy and say, oh, if I introduce a square term, then I can call this ballistic. What? It doesn't have anything to do with ballistic, It's so silly. These are things that drive me nuts. And I told him, yeah, you can add square, and then basically it's taking the power law, right? And then you're adding a square term of a log. And I say, well, if you start to add square terms, cube terms, fourth term, you're going to come closer and closer and closer to whatever you're trying to model. It's called a Tailor series. Basically, it says you take any curve at all, you start to add more and more terms, like more polynomial terms, cube, fourth power, fifth power. You can model anything at all. And your model will come closer and closer and closer to the data. Something, check it out. It's called the Tailor expansion. Okay. And of course, you will be closer to the behavior if you added the square term. Okay. But I don't see anything like that. Look at this data. Where is the space for the square term? You are already correcting here, but it's not going square. It's not going to deviate from, like, in a consistent way from the power law. Is doing crazy things. Is when I told him it's exponential behavior, and then now it's going back to behave like it's supposed to behave. So for some time, that adding the square could have caught, because it's a better approximation, right? If you have, I started with the power law, then I add a square term, of course it's going to look a little bit better if there is like a large deviation from the power law behavior, but it doesn't represent anything. It's just that you're adding some non-linear terms, and so if there is a deviation, that non-linear terms will catch a little bit better this deviation. But you can see the deviation is simply not a consistent pattern. It was an exponential, another exponential. So it's not the square of a power law. So basically it's saying it's the power law plus a square term, right? It's nonsense. until we have a lot of data, and then over time you're showing that for some reason it's doing that. Right now it's just like adding additional terms, and you're giving a lot of significance to that, and there is no significance. So it's my approach is always starts with something simple. That simple explains the majority of the behavior, stick with it, and then explain the changes as deviation from that simple behavior until you have enough data where you can update your model and say, oh no, it's something much more complex. When I did the liquidity model, I started with a power law. I couldn't fit a power law. There was nothing that simple that could explain the relationship between liquidity and the price. So as a kind of coup out, right? It was like a surrendering to that an inability of finding a simple thing. I use this Tailor expansion. But I mentioned that. I say clear. I didn't call it a fancy name. I didn't call it in my article. If you read my article, I say I had to use a Tailor expansion, a polynomial expansion. I stopped at the fourth term because I could have reproduced every kink in that, if I added more and more term. But at a certain point, that is the art of doing that kind of fitting. You're saying, I don't want to add more than, there are also way of doing it. Like when you add this term, there is like a weight that you give to that term, and the fitting will tell you what is the weight. If your weight are starting to become smaller and smaller, okay, you can stop there and say, look, by the time that weight is like 0.1%, I'm stopping. I'm not going to add to anything else. Because if you add anything else, you're starting to model the noise, So I think I stop at the fourth term or something like that. And I always mention it is like take it with a grain of salt. Take it with a grain of salt. So that there is not really reason to add this square term with model adds. There is no justification, theoretical justification, data analysis justification. It's just, if he shows you a chart where, you see, I'm following that deviation up. Yeah, of course, you're adding a non-linear term to the linear because, it's linear, right? If you do it in the log space, it's linear. You're starting with a linear model. You're adding some square term when we are deviating. Of course, that will be slightly better than a simple power law, but you're not catching anything beside a deviation, from the power law behavior. And right now, there is no indication that is something consistent. I'm repeating myself, but do you understand what I'm trying to explain? Hopefully. Yeah. Anyway, I need to find you. I have so many things open. Okay, I think okay. All right. So that was the last question. What is your opinion of the ballistic model of MicroStrategy? All right, guys. I think we covered most of all your questions and all your comments. And we are about 1 hour, so it's actually a good place where to end this. Okay, I'm going to fix the problem with the code because I'm showing here as a holiday discount, so we can probably I'm going to choose like a middle of a month. So the code will be valid until the middle of the month. Okay, but I will post the code in the comment of this video, so you can come back to the video. You can also find it on X. So I'm going to put it in different places, and you will have a discount for joining Patreon. And it will be a yearly discount if you're interested in a year, or monthly discount. So you have an entire month discounted by 40%. That will give you enough time to decide if you like to stay with us or you don't like the program. All right, thank you guys. See you soon. Next week we are going to also go back to the normal schedule with Steven. We're going to have a Wednesday meeting where we talk about the physics of Bitcoin. So join that video too. Okay. See you guys. Bye everybody.